Hi, and welcome to Random Rogers Big Picture for the week of July 27th. Probably be a short video, couple of quick things to talk about. First, just the overall market. Kind of a wild week. They talked about how volatile it was on TV. And, we had a feel-good rally start last week, and so far hasn't had much oomph. Despite my thinking that we're in for a normal bear market, I would really be surprised if it was only a week and a day long feel-good rally. I would expect to get a little more out of it than that. And so I kind of think we'll go up a little bit next week, maybe run another, 50 or 60 points. It seems to me 1310 or so was kind of a stopping point in both directions before. So that kind of makes sense. I'm not calling for that next week, but just to continue to carry on as something of a feel-good rally that might make a lower high before turning around. Excuse me. But we'll see what happens. This is how bear markets work, and if we start to see the market behave that way, there'll be a lot of commentary from the various you-know-who's in the media about why this is the right time to get in, and it probably wouldn't be. Just to kind of reiterate something I've been talking about for a while, it's very difficult to conceive of the notion that with everything that's going on, that a bear market that springs out of the crisis dilemma, liquidity squeeze, yada yada, that all of those things, we get a milder than normal bear market. That just seems odd to me, and I'm repeating that just for emphasis. It makes sense. But if and when we ever take back the 200-day moving average, no matter what I think, I'll wade in slowly and I'll detail it as we get there. But certainly we are in the process. I think it's probably a 12-month, 15-month process. But certainly the market is going through the process of working lower, of making a bottom, and at some point, to be clear, it will turn around as all bear markets do. I'm just not going to be the first one to call that a bottom's in, nor am I going to be the first one to deploy cash into what looks like a bottom. And to be clear, I don't think we're at a bottom now by any means. One other thing, I'll put a link to it underneath the image of the video, because it sums it up nicely from Tom Lydon. But basically there's something going on in Russia with a company called OAO Mekl. I think I'm pronouncing that right, but whatever. It's a steel company, and people are comparing the problems to something akin to what happened to Yukos, if you remember that, in Mikhail Khodorkovsky a couple of years ago. I'm sure that's overblown, but it will create some chatter about whether or not Russian equities should be avoided, or, what you should do about Russian equities, yada, yada, yada. And I was reminded of the fact in reading about this that, Ridex is going to be coming out with a ruble currency share. And I brought this notion up before, but I believe I was vague about it. But now, being a little more specific, Russia has a lot of good things going, and also has a lot of scary things. The political issues, there are issues. They may or may not be real bad issues. That's with this, a repeat of another Yukos type of thing. You can weigh that for yourself. But the issues do exist. It's something to think about. They do have an inflation issue. They are trying to figure out what to do with their currency reserves. At the same time, money is coming in. There's a lot of wealth being created, as they are resource rich. Everybody knows this. That is the theme. So with the Ridex currency shares, one of the 4 new ones that's coming is going to be the Russian ruble. And I'll put a chart of this underneath the video, and you can kind of see how unvolatile it is relative to the RSX ETF. I'll just use that as a proxy just because it's easier. And you can get a sense of the ruble's getting stronger against the dollar, and it's doing so without anywhere near the volatility of the ETF, the stock ETF. And that's, is potentially a way in. It'd be very, very aggressive cash, But in general terms, looking at the situation, the stock market is far more likely to have problems than the currency. In fact, I've got on the tab here, I'll bring it up, I've got the RSX on another tab here on my browser, and it looks like RSX peaked in mid-May, which is kind of an important date for a lot of different things I'm noticing, but kind of peaked in mid-May and is maybe down 20% or so from that time period. So that's a pretty big move. At the same time, the ruble is up. It's just up a couple of percentage points, but as you look, you'll see, and this is kind of going the other way, but the dollar is kind of working down ever so slightly against the ruble. It's nothing dramatic. It doesn't stray too much. Yet over the course of the last 12 months, looks like the ruble's up, as measured by just the exchange rate on big charts, is up by 8 or 9% against the dollar. If the ruble ETF pays a little bit of interest, which it will, then that's all the more return. And the existing currency shares pay monthly, and so I imagine that the 4 new ones will as well. Russia is high yielding. I believe it's high single digits. Is what the overnight rates are. I will try to find out. But this might be a way in for people who don't want this kind of up 20%, down 20% volatility over the course of 3 months, and that is a reasonable thing to want to avoid, is up and down 20% in the course of just 3 months, which is what RSX appears to have done. Well, that's about it. I just wanted to show everyone the flavored Tootsie Rolls. This one is lime. It's pretty good. Kinda tastes like Starburst. What? Starburst? Oh, I screwed that up. Anyway.